Ready to take your business to the next level with new equipment? Odds are you're going to need to access financing to help with that business growth. But it helps to clearly understand what's involved, especially if you're new to business lending. Hi, I'm Peter Nicolau, founder of Peak Capital, an independently owned and operated commercial finance brokerage firm. If you're like most business owners, the idea of investing large sums of cash into improving or purchasing new company assets and equipment can add a lot of stress to your finances, even if you know that it's necessary to facilitate growth. Asset finance can help you drive expansion without having to deplete the funds you need to stay on top of your cash flow. Here's how it works. Let's say you own a small construction company and you've recently got an opportunity that requires you to invest in new machines so that you're able to increase your workload capacity. Without the new equipment, you won't be able to meet the client deadlines. Unfortunately though, you don't have enough liquidity to pay for the equipment up front, so you need to finance the equipment. After approaching a broker, you now know there are a few different funding solutions that you can choose from. The first is a chattel mortgage. With a chattel mortgage, you purchase the goods and the lender takes security or a mortgage over the assets. Your business will then make repayments to the lender over a set period of months, usually 36 to 60 months. Once the final monthly repayment is made, the security is released and you own that asset with no charge against it. Another option is to lease the equipment. There are two types of leasing arrangements you can choose from: a finance lease and an operating lease. With a finance lease, you'll enter into an agreement to make payment for the use of the equipment over a set period. Once the leasing period ends, you'll have the option of purchasing the equipment, extending the lease, or returning the asset back to the finance company. An operating lease, on the other hand, is ideal if you just need to rent the equipment for a specific project. So it won't show up on your balance sheet and you'll only be able to use the equipment for a set loan term, after which you'll give it back to the lender, who is solely responsible for maintaining the asset. So those are the ways you can finance the assets you need. It's also worth mentioning another type of asset finance that lets you release capital tied up in assets you already own. By using your existing equipment or machinery, you can do a sale and hire back with a finance company. And this is another way of raising funds. You can also use your accounts receivables to turn outstanding invoices into an immediate cash injection. This type of facility is called invoice finance, which we'll discuss in another video, so make sure you check it out. The pros and cons of each of these options and the best one will depend on your business's circumstances. For example, your business's credit score will play a role, as will the length of operation. A startup will have fewer options than a business that has been successfully operating and buying assets for years. At Peak Capital, we identify where you're at in your business's life cycle and see what options are out there for you. When it comes to lending, we play to win. So let's work out a game plan that works for you.